Hi everyone, Gavin McMaster here with you again from Options Trading IQ, and today we're going to be looking at the 14 stages of investor psychology. So first stage we have optimism, and it all starts out, we have an outlook on a stock, we're bullish on a stock, we have a hunch, and we buy into it, we make a trade, and we've got optimism that that trade's going to work out really well. From there we have excitement. So the trade starts moving in our direction, we see a little bit of green in our P&L account, making a little bit of money, and we start to anticipate that we're going to make lots of money on this trade, so we're getting very excited. Next up we have the thrill. So the trade continues to move in our direction, and we can't help but feel that we're really smart, we've made such a great decision, and this is all very exciting. It's thrilling that we're making so much money, and we have lots of confidence in what we're doing. We think we're the best thing since sliced bread. We're making lots of money, and we're doing really well. So this is the thrill. This is stage number 3. The next stage is euphoria, and this point is where we have the maximum financial risk, but we've also probably made a massive gain as well. So this is the point where you start to feel euphoric about a trade. This is where your trade could quickly turn into losses. So we start to ignore the basic concepts of risk and risk management and money management, and we're just trading anything and everything that we can, hoping to make a quick buck. All our trades are winners. We never think we're going to make a losing trade again, and we just ignore fundamental concepts of risk management and money management. The next stage is anxiety. So you've gone through this euphoric stage where you're making lots and lots of money, and then all of a sudden your investments start to turn around, and it's like, oh, not really used to this, what's happening? So this is where the first signs of the money that we've made in the market is starting to turn around, and we're giving a little bit back. We've never really seen this happen before. We've been a bit greedy perhaps, and we're anxious to get back to where we were and make that money back and get back to our maximum profit. The next stage is a denial. So at this point the markets have kind of turned around, and your trades are starting to lose money. So you think to yourself, oh, there's got to be something wrong. My analysis is faultless. My trades are spot on. And we start thinking, yep, the market's going to turn around soon. I'll keep these trades on, and I'll get back into a profitable situation. So at this point, we might have had a long-term view, but now we've turned that long-term view into a shorter-term hope, if you will, of things improving and getting back to where we were. And the next stage is fear. This is where reality sort of really sets in, and we really start to become fearful that we're not as smart as we actually thought we were. So instead of being confident in our trading, now we're just really confused, and we have a lot of fear. It's like, am I doing the right thing? Just very fearful of making trades, of making decisions. And at this point, if you can get out with any sort of profit or just a small loss, then this is a point where you really need to be getting out. And the next stage is desperation. So at this point, all of our gains are completely gone. Perhaps we're sitting on some, reasonably sized losses. We'd had our chance to make lots of money where we were in the green or in the black, and now we've lost it all. And we're just attempting to do anything we possibly can just to get that money back. We're desperate to try to get back to where we were and recoup our losses, or get back to the gains that we had. The next stage is panic. You see the panic button here, and this is what a lot of people have been hitting recently, just hitting the panic button because the markets have been selling off. And this is just the most emotional stage of the 14 stages. We're just absolutely panicking. We're clueless and absolutely helpless as to what's happening, and we just feel completely at the mercy of the market, and that we have absolutely no control over what's going on. We just really hit that panic button, close all our trades, or just do something really silly because we're really emotional. Maybe we're doubling down and trying to recoup losses by doing that, and we're just absolutely panicking, getting really emotional and not thinking straight. And the next stage is capitulation. You can see here throwing in the towel, just completely giving up. We've reached our breaking point. We've closed everything out. We're walking away from the market saying, I never want to do this again, and we've just had enough. The next stage is despondency. So after exiting the markets, we don't want to be involved ever again. We've had a terrible experience. We're completely depressed, and we never want to buy stocks again. And we just think that, maybe this wasn't for me, and just never want to be involved with it again. So this is a really rare point that occurs, and it's a very depressing place to be, but it's also the point of maximum financial opportunity because the markets have just completely been oversold. Everyone is now out. We've had some massive losses, and the smart money at this point is going to be starting to come back into the market. The next stage is depression. This is where we're drinking, we're crying, we're praying. How could we be so dumb? We look at what we've been through, the money that we had made, and then we've just lost it all. So some of the smart people, the real traders at this point, will look at themselves, they'll analyze the trades that they made, they'll be looking at their trading journal, and they'll be trying to analyze what went wrong and learning from that for the future, so that they don't make the same mistakes and they don't go through the same experience. This is the thing that really sets good traders apart from your average traders. They really analyze what went wrong. And after depression comes hope. So we start thinking, yeah, I can actually do this. I've analyzed what went wrong. I'm ready to get back into the market. I think I can do this again. I think I can not fall for the same mistakes that I made in the past. And we come to realize that yes, the market does have cycles, and that maybe we just got in at the wrong time, and we can start to analyze things a little bit better, analyze the market cycles, and we can start looking for new opportunities. So we've got a hope there for the future. We're getting back in. And the last stage in the cycle is relief. So we've got back into the markets, we're starting to make a little bit of money again, we've made back some of that money that we've lost, and we've regained a little bit of that faith that we have in our ability to analyze the market and our ability to invest and to trade. And then the cycle starts all over again. So I really hope you enjoyed this short video and have got a lot out of it, and maybe starting to analyze the way you look at the market and the way your emotions and your psychology are affected by the different stages. And maybe you're in one of these stages now, and maybe you need to look at how your emotions are behaving in terms of how that's affecting your investments and your trading. So really hope you've got a lot out of it, and as always, if you've got any questions or comments, please just shoot me an email. So have a great day, guys. Thanks very much.